Hi, and welcome to this week's Symax Fintech Market Insight. From now on, we've broken it into four parts. So this is part one, where we look back at last week's action. As usual, disclaimer: trading does involve the potential risk of loss of capital and is not suitable for everyone, although hopefully it is for you. Now, just be aware of leverage, because you can lose substantially more than that initial investment that you make. Everything that's included in these is just purely for educational purposes. We are not trying to encourage you to trade or invest. That has to be your decision. And before you make that decision, carefully consider the risks involved, your financial situation, your level of experience and risk appetite. And of course, you should only risk capital you're prepared, but more importantly, can afford to lose. If you've got any doubts whatsoever, seek independent financial advice before you risk your capital. Please, that last bit is so important. Until you understand trading, do not try and trade live. Practice, practice, practice with a demo. Okay, so again, another very active week, shall we say. So last week was another nervous week in the markets, with plenty of central bank action. The Fed and Bank of England both raised by 25 basis points. There was lots of other central banks as well, but I'm just focusing on those two for the moment. Powell was pretty uncommitted on the path forward, though, except to emphasise inflation is still too high and it's still sticky. I must admit, though, he probably enjoyed the fact that, inflation was less of a topic at the press conference, with the focus still on the recent banking crisis. Now, interesting, the dot plot, the further you go out, the wider the ranges between the dots. Just between the highest and the lowest levels of expectations from the members. And we'll see that on the next slide. But before we move on, the banks remained in focus. UBS finally agreed to buy Credit Suisse. Probably overall a good deal for them. They got parts of one of their major competitors. And of course, they managed to negotiate for potential losses, or at least some of them, to be underwritten by the central banks. Then on Friday, Deutsche Bank seemed to be the next target. There was questions surrounding sort of their stability. And that will be an interesting thing for the week coming forward as well. Something I did notice was Bitcoin broke out, and this seemed to be where maybe people were looking to exit banks, and maybe crypto, or Bitcoin certainly, has become the digital gold for the moment. Now, the big question for last week continues to be, what is the priority, financial stability or price stability? And I would say the latter is the winner. It is still about that price stability. Of course, central banks aren't going to let all the banks drop, or confidence in the financial system disappear any more than it has so far. But what was quite interesting was, at the FOMC meeting, Yellen was speaking at the same time, and the markets sort of more reacted to what she was saying at times than what Powell was saying, because she was discussing whether or not the FDIC deposit insurance scheme was going to be expanded, and she was saying that that's not being considered yet. So what was clear for the Fed, they seem unsure about where the economy is heading and when. And that seems to be increasing the chances of a recession, a hard landing. Doesn't it keep changing? Last year, yeah, recession. This year, earlier, in the first couple of months, well, probably we're going to miss one, with China reopening, etc., etc. And then all of a sudden, banking crisis hits. Okay, it's sort of fairly isolated, but it's around, and it is sort of making investors certainly nervous of the markets. And it's going to be an interesting week just to see what happens with Deutsche Bank if there is a big push on that one. Bank of England, they just, you've got to expect further hikes for them because inflation increased to 10.4. So, still got double-digit inflation in the UK where I'm based. In the Eurozone, PMI jumped to 54.1. Mainly on services, but again, that is going to be a further concern for the ECB, and of course they're going to keep an eye on that along with the rest of the data that comes out before their next meeting. Canadian inflation increased less than expected, only 0.4% month on month. That meant CPI is falling, and it dropped from 5.9% to 5.2%. But again, you just got to sort of look at what's causing that, and that was helped by the lower gasoline prices. So here's the dot plot. So this is the voting members where their expectations are for the coming few weeks or well, years actually, but where they see rates need to be to sort of get back to where they want to with the economy. Now I've added two because they're only every quarter now. So what I've added in is December of last year, which is on the left, and then I've added the one that was this week, and so you can sort of compare the two. Now, there's not really that much difference between them, but as I say, if you look at 2025, look at that. I mean, you've got one dot so high, and then all spread out coming down in that for 2025, and then further term, longer term rates looking lower. I'm just not so sure about that. Low rates are for emergencies, for a crisis. Okay, we see bits and pieces of them, and there's always another crisis around the corner. But shouldn't we have these types of level of rates, just to sort of control people's borrowings, rather than taking them down low, everyone sort of borrows to the hilt, then they go up and people can't afford it. So, I think personally it's better around these levels. And if the banks were forced to actually give a decent rate of return for leaving the money on deposit, I'm sure people would be happy to actually park some money with the banks as well. So, okay, that's it for this very first part. Now, if you are interested, we're going to move on to part two, which is what's coming out next week. So, welcome to Symax Fintech Weekly Market Insight Part 2. This is where we're going to look at this coming week's data. As usual, disclaimer, trading does involve the potential risk of loss of capital and is not suitable for everyone, although hopefully it is for you. Now, just be aware of leverage because you can lose substantially more than that initial investment that you make. Everything that's included in these is just purely for educational purposes. We are not trying to encourage you to trade or invest. That has to be your decision. And before you make that decision, carefully consider the risks involved, your financial situation, your level of experience and risk appetite. And of course, you should only risk capital you're prepared, but more importantly, can afford to lose. If you've got any doubts whatsoever, seek independent financial advice before you risk your capital. Please, that last bit is so important. Until you understand trading, do not try and trade live. Practice, practice, practice with a demo. Okay, so looking forward to this coming week. First of all, just remember, it depends where you are in the world, but Europe's clocks move forward 1 hour. That means US data will come out the same time as it used to or usually does. So everything's back in sync there. When we look at the US, okay, PCE, which is, the Fed's favoured inflationary piece of data, that comes out Friday. But, the other bits and pieces coming out during the week. We've got housing data, manufacturing, consumer confidence, Chicago PMI, and Michigan consumer sentiment. Now, I like consumer confidence because we account for up to 70% of an economy. So how confident we are in our earning ability is going to help to dictate how much we spend. So for me, that's a major piece of data. In the UK, there's not too much out. We've got housing data, GDP. Moving on to the EU. So we've got sort of quite a bit coming out. We've got business climate, economic sentiment, again that consumer confidence, CPI, and the unemployment rate. In Germany, we've got IFO, consumer sentiment, CPI, retail sales. And then when we move on to China, PMI, so we can, there's a couple come out there, manufacturing and non-manufacturing, so we can see how they're doing since they've reopened, whether things are progressing there. In Canada, GDP. Then Japan, we've got unemployment rates, CPI, retail sales, and industrial production. In Australia, we also have retail sales and CPI. So that's the week ahead. Just keep an eye out for anything around Deutsche Bank or just banks in general at the moment. And also what Yellen and Powell may say, especially regarding sort of the how much support they're either giving to the banks, but also, this sort of covering losses and all that, which, I'm going to talk more about in the macro outlook. But that's it for this part, and I hope that you will look at part 3. So welcome to Symax Fintech Market Insight Part 3, and this is the macro outlook. As usual, disclaimer, trading does involve the potential risk of loss of capital and is not suitable for everyone, although hopefully it is for you. Now, just be aware of leverage because you can lose substantially more than that initial investment that you make. Everything that's included in these is just purely for educational purposes. We are not trying to encourage you to trade or invest. That has to be your decision. And before you make that decision, carefully consider the risks involved, your financial situation, your level of experience and risk appetite. And of course, you should only risk capital you're prepared, but more importantly, can afford to lose. If you've got any doubts whatsoever, seek independent financial advice before you risk your capital. Please, that last bit is so important. Until you understand trading, do not try and trade live. Practice, practice, practice with a demo. Okay, so moving on to the macro outlook. Of course, there's still a lot of focus on the banking sector. Now, the macro outlook has become a little bit blurred because of that. What's going on with the banking industry, these casualties have come sort of 3.5 banks almost gone, and more having to be done by other banks to prevent the other 2 banks from actually collapsing as well. Now, central banks remain focused more on inflation and price stability. You know, they've sort of really emphasised, especially in this last week with all the rate increases, that that is their number one priority. You know, although to be honest, in reality, the banking crisis has been pretty isolated so far. Hopefully, it's not going to grow. You know, Deutsche Bank could be the defining factor there. Now, data-wise, you know, we still see inflation is way too high, and I'm sure that must be frustrating the central banks. You know, a couple of points I'd like to make here really are that the central banks, they're just not allowing enough time for the rate increases they've done to sort of filter into the economy and for the economy to reflect them, or for them actually to be seen in the data. And of course, you know, the actions that they've taken can really take several months to show up properly in the data. Now, the other point I'd like to make is that, you know, and I go on about this, is that companies are boosting their profit margins, and that's by not passing on any savings to the consumers. And as I keep highlighting, most certainly in the food sector. You know, we all need to eat, so they're getting away with it at the moment. Which again, you know, it's keeping that inflation higher than perhaps it should be. You know, when you look at the way the price of a lot of the raw materials have come down, including energy, food inflation, I would say, is the biggest issue. Again, service sector as well, because of having to pay higher salaries, could be another one, I guess. So with the banking sector being in a little bit of a crisis, it's probably increased the chances of a recession over recent weeks. You know, again, we're just going to have to see if there's any more first, or whether that was it. Now, Russia continues to sort of beat its war drum. It's looking to conscript more soldiers. It's moving or going to move nuclear weapons towards borders. And, you know, they are supposedly preparing for a new ground assault. That is providing, of course, that they can find the soldiers, the equipment, and of course the weapons to actually make those advances. Now, you know, I just touched on energy, and energy prices continue to remain under a bit of pressure, really. I mean, WTI last week traded below $65 at one stage, before it rallied back up to around 71. And you know, part of that is going to be recession fears, and you know, there seems to be plenty of supply around, and of course, you know, I think one of the major impactors has been also the fact that Europe's weather has been seasonally warmer than it could have been, for sure, or it usually is. But you know, if it had been a severe winter, I would say that Europe would have been in recession by now. But you know, this weather has really saved them. Now, many are expecting the Fed to cut rates this year. You know, I just don't see it. I really doubt that, unless a major crisis sort of erupts, you know, around banking or something else that we haven't even seen yet. But you know, for me, inflation is still way too high, and that means for me that, you know, these central banks are going to need to keep rates higher for longer. I just really can't see it this year. You know, again, just remember, this is my sort of personal view. Now, you know, that said, when you look at the short-term interest rates, the Eurodollar ones, based on the US, you know, they're pricing in around 4% for December. September's pricing in around 4.5%. And yet, you know, we're still seeing, and they're still threatening to put rates higher. So, you know, that's going to be an interesting one. I just think there's some mispricing there around those. I traded those stars for 20 years. So I would listen out for any more rumours on Deutsche Bank for sure. And you know, again, this coming Friday, we've got the Fed's favoured inflation data of the PCE. Now, I'm throwing more doubt on data, and the reason for that, not all of it, of course, but the surveys that they send out. These are the ones that I sort of are questioning more. And the reason for that is they only seem to be getting anywhere between sort of 30 and 50 something percent responses. So, you know, how accurate can that be? And you know, we're trading and we're assessing economies based on a lot of this data. So, you know, it's just something just to have that little sort of doubt in your mind. Uh, Anyway, that's it for the macro outlook this week. Not too much, but you know, again, we just got to keep an eye on the same things: inflation, rates, and of course, you know, we're going to get more central bankers speaking, Lagarde speaking twice, and then also just keep an eye on the banking sector. You know, we saw their stocks have a big crash, then a recovery, and then, you know, with rumours of what's going on with Deutsche Bank or potentially going on with Deutsche Bank, who knows what's going on there yet. But, you know, just sort of just listen, just make sure you're listening to you've got some sort of news service coming through to you. You know, I mean, or Squawk or something. So, anyway, that's it. So now we're just going to move on to the technical analysis I do each week in part 4. As usual, just a reminder of some of the services that we provide to help traders. Obviously, it's why we do this, is to help you prepare for next week. And then we also include to our subscribers daily newsletter. That includes fresh chart levels each day, fresh pivot points, breakout levels. You know, I had people contacting me on Friday saying that they did well using one of those breakout levels. So fantastic, well done. Now, if you want to sort of improve on your knowledge in some areas, we do one-day workshops just to help you fill in those gaps. One week courses, you know, that can really sort of help you build those foundations, strong foundations to turn trading into a career. And then if you're really serious about trading, then we've got our comprehensive masterclass. You know, this has been designed especially to provide you with all the knowledge and trading tools, that are going to be required to navigate today's markets, and that's on any asset class as well, which is really important because you know you never know what's right for you. Just trading something just because you've got access to it doesn't mean it's the best opportunity, the best thing for you. You've got to try all the asset classes, but of course, you know, do that in demo mode. Be safe while you're experimenting. And of course, you know, we're providing courses every day of the year. So then, you know, just sort of reach out. There's our calendar. If you need specific dates, you know, sometimes we can juggle them around or add extra ones in. Trader mentoring, you know, again, we try and help individuals to get to that next level time and again. We consult to companies to help them with their hedging for foreign exchange and commodity exposure, trading educational content to individuals, exchanges, brokers, you know, everything all round. We do lots of webinars even just to sort of constantly keep traders up to date with what's going on. And then, of course, you know, if you're lacking that capital to get into trading, and that's the only thing that's holding you back, then, you know, you can look to qualify for a funded account through our partner Nordic Funder, and there's a link to that for you to use. You never know, they may even offer you a discount. Any questions or anything, contact us, info@symaxfintech.com. Any trading questions you'd like to ask me personally, then it's chris.tubby@symax-int.com. forextrading.com. That only leaves me to say I wish you a great trading week, a great week in general actually, and just be lucky. So welcome to Symax Fintech Weekly Market Insight. This is part 4, so this is all based around technical analysis. As usual, disclaimer, trading does involve the potential risk of loss of capital and is not suitable for everyone, although hopefully it is for you. Now, just be aware of leverage because you can lose substantially more than that initial investment that you make. Everything that's included in these is just purely for educational purposes. We are not trying to encourage you to trade or invest. That has to be your decision. And before you make that decision, carefully consider the risks involved, your financial situation, your level of experience and risk appetite. And of course, you should only risk capital you're prepared, but more importantly, can afford to lose. If you've got any doubts whatsoever, seek independent financial advice before you risk your capital. Please, that last bit is so important. Until you understand trading, do not try and trade live. Practice, practice, practice with a demo. Okay, so here comes our technical analysis section. Just a reminder of the what all the colors and stuff means on the charts. So on the right hand column, if there's black numbers, they are support and resistance levels that I've identified generally from trend lines. Brown numbers are going to be breakout levels. Claret numbers are going to be where I've sort of identified levels from just seeing support and resistance in there, or they could be based on double or triple tops or bottoms. Just be aware that some of one or two of them, especially the brown one, may clash with the pivot points, and if there's any Fibonacci, which I don't think there is this week. Okay, so let's start off with the Dow. Stocks on Friday sort of had a reasonable performance. They finished towards the highs. When we look at the Dow, I've got resistance on the daily at 32,861 and support at 31,944. When we look at the 30-minute, sort of got it closing up in that sort of little up channel. I've got resistance at 32,487 with support at 32,412, 32,078 and 31,944. So just remember, all of this data is based on futures. So these are futures prices that I'm giving you here. So for the S&P daily, I've got resistance at 41.32, 40.68 with support at 39.30 and 38.55. Moving on to the 30-minute, I've got resistance at 40.11 and support at 39.85, 39.37. As you can see, the pivot points are on here, and it nicely sort of rejected the S1 level several times during the session. Nasdaq daily resistance at 13,102, support at 12,675 and 12,000. On the 30-minute, again, just finishing that little uptrend. Got resistance at 12,988 and 12,925 with support at 12,869 and 12,675. The Russell daily, I've got resistance at 1797, 1751 with support at 1702. On the 30-minute, resistance 1774 and 1751, support 1741 and 1708. So, I mean, the stocks did have a sell-off sort of Friday, sort of midday type thing, European time that is, and then it sort of rallied pretty much for the rest of the session. So as you can see there again with the Russell, it did go down and test that S1 level on the pivot points. Pivot points have been used for decades by pro traders. And if you don't understand them, you don't understand how to trade them, then contact us. We can help you to do that. I mean, we provide technical analysis courses, and we don't just include candlesticks. We include other chart types and things that you can use as well to help you with your decision making. So looking at a couple of the currencies as usual. So this is cable, the pound against the dollar, and here, the dollar had a pretty mixed week really. Resistance I've got at 123.75 and 123.13. Support at 120.75 and 119.49. Then on the 30-minute, I've got resistance at 123.51, 123.09 and 122.59. I've got support at 122.47 and 121.73. So obviously one of those is going to break pretty quickly because that's a narrow range there. But again, you can see how it sort of tested that S2 level for the pivot points. It did sort of get below there for a little while, and then it had that recovery towards the end of the session. On the euro versus the dollar, I got resistance at 109.96, support at 106.76 and 106.00. It just seems to struggle when it gets to that 110 area still. On the 30-minute, I've got resistance at 109.77, 108.91 and 108.14. with support at 1.0795 and 1.0775. Moving on to Bitcoin, as I said in some of my early analysis, it seems to be sort of at the moment like the digital gold almost, where people are more nervous of the banks. And, has it become an Avon class of its own? Okay, so on the daily, I've got resistance at 29.375 and 28.872, with support at 27.365 and 23.990. The 30-minute, I've got resistance at 28.910, 28.217, and support at 27.655. 27.390 with a breakout potential at 26.720 should it get down there. So this is the Bitcoin Nasdaq. This is a daily that I've put in again. So we do see where it sort of starts to sort of correlate tightly and then starts to move away. I'm switching between anything from a quarterly to a daily to a 30-minute on this. So this is the daily chart, just so you can see how they're performing against each other at the moment. Just remember, this isn't a tight correlation, so just be wary if you're looking at it. It's really just more how the stock market and Bitcoin are reacting to each other. Moving on to gold. Gold sort of almost is having such big ranges. I mean, $100 the previous week. Last week it was almost $80. Now I've got resistance at 2011, and I've got support at 1943. When we look at the 30-minute, I've got resistance at 2018, 2006, and 1988. So, it did get back up to test that 2000 level again. And then I've got support at 1968 and 1942. Last but not least, oil. We're looking at WTI on the daily. So I've got that nice resistance line in there, around about the 72.18 level. And just remember a while back, the range was 82 to 72, and then it sort of broke down from the 72s and below the 70s. It actually got below 65. So, and back up to 71. So, it's sort of still got ranges, but it's just that range is sort of moving slightly. So 72.18 for resistance, 66.84 for support. And then finally on the 30-minute, I've got resistance at 72.24, 69.39, with support at 66.87 and 65.84. So that's the end of the analysis. As usual, just a reminder of some of the services that we provide to help traders. Obviously, it's why we do this, is to help you prepare for next week. And then we also include to our subscribers daily newsletter. That includes fresh chart levels each day, fresh pivot points, breakout levels. I had people contacting me on Friday saying that they did well using one of those breakout levels. So fantastic, well done. Now, if you want to sort of improve on your knowledge in some areas, we do one-day workshops just to help you fill in those gaps. 1 week courses, that can really sort of help you build those foundations, strong foundations to turn trading into a career. And then if you're really serious about trading, then we've got our comprehensive masterclass. This has been designed especially to provide you with all the knowledge and trading tools that are going to be required to navigate today's markets, and that's on any asset class as well, which is really important because you never know what's right for you. Just trading something just because you've got access to it doesn't mean it's the best opportunity, the best thing for you. You've got to try all the asset classes, but of course, do that in demo mode. Be safe while you're experimenting. And of course, we're providing courses every day of the year. So then, just sort of reach out. There's our calendar. If you need specific dates, sometimes we can juggle them around or add extra ones in. Trader mentoring, again, that we try and help individuals to get to that next level time and again. We consult to companies to help them with their hedging for foreign exchange and commodity exposure, trading educational content to individuals, exchanges, brokers, everything all round. We do lots of webinars even just to sort of constantly keep traders up to date with what's going on. And then, of course, if you're lacking that capital to get into trading, and that's the only thing that's holding you back, then you can look to qualify for a funded account through our partner Nordic Funder, and there's a link to that for you to use. You never know, they may even offer you a discount. Any questions or anything, contact us, info@symaxfintech.com. Any trading questions you'd like to ask me personally, then it's chris.tubby@symax-int.com. That only leaves me to say I wish you a great trading week, a great week in general actually, and just be lucky.